In this video, we're breaking down 5 undervalued growth stocks that analysts believe the market is mispricing right now, and the kind of companies that could quietly deliver massive returns over the next few years. These are businesses operating in critical industries with strong demand tailwinds, real revenue growth, and the kind of positioning that allows them to compound value over time. We're talking about companies powering AI infrastructure, enabling next-generation drug delivery, and dominating precious metals production at a time when global uncertainty is rising. Let's get straight into it. The first company on this list is Supermicro, ticker symbol SMCI. This is one of the most important companies you probably are not fully paying attention to, especially if you believe artificial intelligence is going to continue expanding at the pace we're seeing today. Supermicro is not building the AI models, it is not designing the chips. But what it is doing is arguably just as critical. It is building the infrastructure that makes AI possible. Every AI system, every data center, every training cluster, every inference workload needs high-performance servers. And that is exactly where Supermicro dominates. This company specializes in high-performance, energy-efficient server solutions that are customized for AI workloads, cloud computing, and enterprise applications. Now think about the scale of that opportunity. As companies rush to deploy AI capabilities, they are not just buying chips, they are building entire systems around those chips. They need racks, cooling systems, optimized server architectures, and integrated solutions. Supermicro is positioned right at the center of that build-out. And what makes this even more powerful is their speed. Unlike traditional server companies that move slowly, Supermicro is known for rapidly designing and delivering customized solutions tailored to the latest hardware innovations. When new AI chips hit the market, Supermicro is often among the first to integrate them into full systems. That gives them a major competitive edge. Now let's talk about what analysts are seeing. Supermicro has a stock upside potential of approximately 42.47%. That means analysts believe the current market price does not fully reflect the company's growth trajectory. Even more interesting is institutional interest. There are 39 hedge funds holding positions in SMCI. That is not small. That tells you sophisticated investors are paying attention to this company and are positioning themselves early. Now here is where things get really compelling. Supermicro has been experiencing explosive revenue growth driven by demand for AI infrastructure. But the market has been volatile, and the stock has pulled back from previous highs. That creates a disconnect. You have a company that is growing rapidly, benefiting from one of the biggest technological shifts of our time, yet the stock is not fully pricing in that long-term opportunity. That is exactly what undervaluation looks like in growth investing. It is not about cheap for the sake of cheap, it is about mispriced future potential, and Supermicro fits that profile perfectly. Another key advantage is their focus on energy efficiency. Data centers consume enormous amounts of power. As AI workloads increase, energy costs become a major constraint. Supermicro designs servers that are optimized for power efficiency, which makes them highly attractive to large-scale data center operators. This is not just a nice feature, it is becoming a necessity, and when a product becomes a necessity, demand becomes durable. That is the kind of dynamic long-term investors look for. So when you combine rapid growth, strong institutional backing, and a central role in AI infrastructure, you start to see why analysts believe this company is still undervalued. If this resonates with you, you're exactly who this channel is for. People who are ready to stop losing money in the market and take their investment portfolio to the next level. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. The second company on this list is 𝗗𝗟𝗓𝗦𝗍, ticker symbol AEM. Now this is a completely different type of business, but just as important. 𝗗𝗟𝗓𝗦 is one of the world's leading gold mining companies. And before you think of gold as just a defensive asset, you need to understand the bigger picture. Gold is not just about safety, it is about monetary systems, inflation protection, and global uncertainty. And right now, all three of those factors are in play. Central banks are accumulating gold at record levels. Geopolitical tensions are rising, and investors are increasingly looking for assets that can hold value in uncertain environments. That creates a powerful tailwind for gold producers. But not all gold companies are created equal. 𝗗𝗟𝗓𝗦 stands out because of its operational efficiency, high-quality assets, and consistent production growth. This company operates mines in some of the most stable mining jurisdictions in the world, including Canada, Finland, and Australia. That matters, because mining is not just about what is in the ground, it is about where that ground is located. Political stability, regulatory clarity, and infrastructure all play a role in long-term profitability. 𝗗𝗟𝗓𝗦 has positioned itself in regions where it can operate efficiently and sustainably. Now let's look at what analysts are saying. The stock has an upside potential of approximately 41.17%, and there are 56 hedge funds holding positions in the company. Again, strong institutional interest. But here is what makes this even more interesting. Gold prices have been rising, yet many gold stocks have not fully kept pace. That creates an opportunity. Agnico Eagle has strong production growth, disciplined cost management, and exposure to rising gold prices. That combination can drive earnings higher over time. And because gold tends to perform well during periods of economic uncertainty, this company also provides a level of portfolio stability. So you are not just getting growth, you are getting resilience. And in today's market, that combination is extremely valuable. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. The third company on this list is 𝗗𝗟𝗏𝗧 𝗨𝗟𝗡𝗧, ticker symbol HALO. This is one of those businesses that sits quietly behind the scenes but plays a critical role in the future of medicine. 𝗗𝗟𝗏𝗧 is not a traditional biotech company focused on discovering blockbuster drugs. Instead, it has built something arguably more scalable, a platform. The company's core technology is called 𝗗𝗟𝗏𝗡, a drug delivery platform that allows medications to be administered subcutaneously instead of intravenously. Now, why does that matter? Because intravenous drug delivery is time-consuming, expensive, and often requires patients to sit in a clinic for hours. Subcutaneous delivery changes that. It allows treatments to be administered more quickly, more conveniently, and in many cases outside of a hospital setting. That is a massive improvement in patient experience. But more importantly, it is a massive improvement in efficiency for healthcare systems. And that is exactly why major pharmaceutical companies are partnering with 𝗗𝗟𝗏𝗧. Instead of building their own delivery solutions from scratch, they license 𝗗𝗟𝗏𝗧's technology. That creates a highly attractive business model. 𝗗𝗟𝗏𝗧 earns royalties on multiple drugs across different pharmaceutical companies without taking on the full risk and cost of drug development. That means diversification, that means scalability, and that means high-margin revenue streams. Now let's look at what analysts are seeing. 𝗗𝗟𝗏𝗧 𝗨𝗟𝗡𝗧 has a stock upside potential of approximately 43.46%. That is one of the highest on this list. And there are 31 hedge funds holding positions in the company. Again, strong institutional backing. But here is where it gets interesting. As more biologic drugs come to market, the need for efficient delivery systems increases. 𝗗𝗟𝗏𝗧 is positioned right at that intersection. Every new drug that can benefit from subcutaneous delivery becomes a potential revenue stream. And because 𝗗𝗟𝗏𝗧's model is based on partnerships and royalties, its growth compounds over time as more agreements are signed and more drugs reach commercialization. This is what you call a platform business with network effects. The more partners they have, the more valuable their technology becomes, and the more embedded they become in the pharmaceutical ecosystem. Another key advantage is predictability. Unlike traditional biotech companies that rely on a few high-risk drug candidates, 𝗗𝗟𝗏𝗧 generates recurring revenue from multiple sources. That reduces volatility and increases visibility into future earnings. And yet, despite all of this, the stock is still considered undervalued by analysts. That is exactly the kind of disconnect long-term investors look for. A company with strong fundamentals, expanding market relevance, and a business model that scales efficiently over time. 𝗗𝗟𝗏𝗧 checks all of those boxes. The fourth company on this list is 𝗗𝗜𝗦𝗡 Mining, ticker symbol CDE. Now we are shifting back into the precious metal space, but this time with a slightly different angle. 𝗗𝗜𝗦 Mining is a silver and gold producer, with operations across North America. And what makes this company particularly interesting right now is its leverage to rising metal prices. When silver and gold prices increase, mining companies like 𝗗𝗜𝗦 can experience significant operating leverage. Why? Because their costs are relatively fixed in the short term, so when prices go up, margins expand. And when margins expand, earnings can grow disproportionately. That creates powerful upside potential. Now let's look at the numbers. 𝗗𝗜𝗦 Mining has a stock upside potential of approximately 48.61%. That is the highest upside on this list so far, and there are 51 hedge funds holding positions in the company. So again, strong institutional interest. But here is the key point. Silver is not just a precious metal, it is also an industrial metal. It is used in solar panels, electronics, and various industrial applications. As the world moves toward renewable energy and electrification, demand for silver is expected to increase. That creates a dual demand driver. You have investment demand from people seeking a store of value, and you have industrial demand from technological growth. 𝗗𝗜𝗦 Mining sits right at the intersection of both. Now add in the fact that the company has been improving its operational efficiency and focusing on higher quality assets. That positions it to benefit even more from rising metal prices. But like many mining stocks, it has experienced volatility, and that volatility has created an opportunity. Because when the market focuses on short-term fluctuations, it often misses long-term trends. And the long-term trend here is clear: rising demand for precious and industrial metals, improving operational performance, and significant upside potential according to analysts. That is exactly the kind of setup that can lead to strong returns over time. The fifth and final company on this list is Pan American Silver, ticker symbol PAAS. And this one ties together a lot of the macro themes we have been talking about throughout this video. Pan American Silver is one of the largest primary silver producers in the world, with operations across Latin America. But what makes this company particularly interesting is not just its scale, it is its positioning, because silver is entering a very unique moment in the global economy. On one side, you have its role as a precious metal. Investors turn to silver during times of uncertainty, inflation, and currency instability. On the other side, you have its role as an industrial metal. Silver is a critical component in solar panels, electric vehicles, and advanced electronics. So unlike gold, which is primarily driven by investment demand, silver benefits from both economic expansion and economic uncertainty. That is a rare combination, and Pan American Silver is one of the companies best positioned to capitalize on that dynamic. Now let's look at what analysts are seeing. Pan American Silver has a stock upside potential of approximately 46.38%, and there are 38 hedge funds holding positions in the company. Once again, strong institutional interest, but here is where things get even more interesting. The company has been actively optimizing its asset portfolio. It has focused on improving operational efficiency, strengthening its balance sheet, and enhancing production capabilities. That matters. Because in mining, scale alone is not enough. Execution is everything, and companies that can consistently deliver production while managing costs effectively are the ones that create long-term shareholder value. Another key factor is optionality. Pan American Silver has exposure to both silver and gold. That gives it flexibility. If silver prices surge due to industrial demand, the company benefits. If gold prices rise due to macro uncertainty, the company also benefits. That diversification within the precious metals space adds another layer of resilience. Now step back and look at the bigger picture. We have a world that is increasingly focused on renewable energy. We have ongoing geopolitical uncertainty. And we have central banks that continue to navigate complex monetary environments. All of these factors support demand for precious metals, and yet many mining stocks, including Pan American Silver, are still trading below what analysts believe they are worth. That is the opportunity. It is not about chasing what is already popular. It is about identifying what is valuable before the market fully recognizes it, and Pan American Silver fits that profile. Now that we have gone through all 5 companies, let's connect the dots, because what makes this list powerful is not just the individual stocks, it is the combination. You have Supermicrocomputer, which is directly tied to the explosive growth of artificial intelligence and data infrastructure. You have 𝗗𝗟𝗏𝗧 Therapeutics, which is enabling the future of medicine through scalable drug delivery technology. And then you have 3 companies in the precious metals space: 𝗗𝗏𝗏𝗘, 𝗑𝗏 Mining, and Pan American Silver, all positioned to benefit from global macro trends. That gives you exposure to both innovation and stability, growth and resilience, technology and real assets. And that kind of balance is incredibly valuable in today's market, because markets are not linear, they move in cycles, and portfolios that can perform across different environments are the ones that stand the test of time. Now here is the key insight. Every single one of these companies is considered undervalued by analysts. They all have meaningful upside potential, and they all have strong institutional interest. That combination does not happen by accident. It happens when the market has not fully caught up to the underlying fundamentals. And that is exactly where opportunities are created. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I want to hear from you. Looking at these 5 companies, which do you think has the strongest long-term advantage? Is it the AI infrastructure play with Supermicrocomputer, the scalable biotech platform with 𝗗𝗏𝗏𝗧, or the macro-driven opportunity in precious metals with 𝗗𝗏𝗏𝗘, 𝗗𝗏 Mining, and Pan American Silver? Let me know your thoughts in the comments. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.